This is Business Incorporated. Thank you for joining us. I'm Chimezie Obi Iwago. On the show today, Ghana's economy seen up to 40% bigger after data overhaul. Kenyan court temporarily suspends Robin Hood tax on bank transfers. Plus, Namibia nets $280 million loan from African Development Bank. All right, let's get the show started now. Starting off with the markets, the Nigerian stock market index made a reversal into the green zone at intraday, up 0.16%. South African JSE index was down 0.23%, while Egypt led losses by 0.91%. Kenya closed in the green on Wednesday. And in the Middle East, only Abu Dhabi was up at intraday. The index was at 0.32%. Dubai was down 0.20%, Qatar down 0.29%, and Saudi Arabia down 0.12%. And in the U.S., stock index futures pointed to a negative open as investors tracked further earnings results and monitored political events. Around 4 a.m. Eastern Time, Dow futures fell 38 points, indicating a negative open of 55.29 points. The Nasdaq and the S&P 500 futures also indicated a downbeat start to their respective trading sessions. Market players are also awaiting jobless numbers due at 8:30 a.m. Eastern Time and the Philly Fed Manufacturing Index due at the same time. Meanwhile, traders will also keep an eye on politics after President Donald Trump says that the U.S. may negotiate a trade deal with Mexico. All right, let's move straight to Europe, where shares fell in early trade as investors digested further corporate results and political events. For more from the markets, here is my colleague in Frankfurt, Ulrich Batz. Hello, Ulrich. Good afternoon.
Good afternoon to you.
Right, let's start with the emerging markets, which was reported to have lost estimated $4 trillion this year. Is the storm over now, and are there concerns of contagion of the developed markets?
Well, you know, I don't have a crystal ball with me. I don't know if that fall is going to continue, but with all the signs that are out there, it sure seems like it. The fall continued today, the yuan in China dropping to a one-year low. The equity markets there also lower. And really what's behind all the nervousness is not getting any better. In fact, it's getting worse. The trade conflict with the United States, whether it's with China or now with the EU as well. The EU announcing tariffs on steel if certain quotas are overfulfilled, and it's going to go on, and it's going to hurt the economies. That's what many institutions are saying. And in terms of contagion here to the developed markets, like here in Europe, they're also suffering already. Sentiment is suffering. Trading is practically treading water here because of nervousness, anxiety over it. The spillover effects of the market losses in emerging markets, that's something that people are aware of in the developed markets. They're keeping their eye on it, and it's a discussion at times, but it's not yet something that I would call a worry here with the people, not yet.
All right, let's look at the U.S. The annual budget deficit is projected to top $1 trillion next year. What are the key concerns about this for the markets?
The key concern is that, it's a thriving economy. It's hot. The labor market is going full swing. In many instances, employers can't find the right kinds of staff. And the government, Donald Trump, is pouring money into this economy. Of course, part of this is also increased defense spending. But the stimuli and the tax cuts, of course, which make the need for the budget to grow larger, that's what many economists here see as an unnecessary perk. Better to save your ammunition for tough times, when you need more government oomph to get a down economy back up. But now there's a danger of overheating, of inflation picking up and rates picking up, interest rates, and that also stopping the economy. That's not something people look at with a lot of admiration here.
And in corporate news, take us through some of the big deals coming out of the Farnborough Air Show in the UK.
Yeah, big planes there, big deals worth billions. There's so much at stake there. Of course, the plane makers, the manufacturers choose these air shows to announce or to firm up deals that have been in the making or that have been made, and they're reconfirmed. I think the biggest ones are one worth about $30 billion for Airbus. Air Asia, the Malaysian airline, it's now Airbus's biggest customer. It's made an order for 100, I repeat, 100 A330neos, and it's looking to expand its routes and to be able to serve long-haul routes efficiently. And the new A330 has new engines, so that's attractive. But it's not attractive for everyone. Hawaiian Airlines is opting for 10 Boeing 787s, and it canceled an order for A330s, have that order. And another big order for Boeing is 29 freighters of the type 777, and that's going to a Russian logistics company. So billions and billions flying around in the air, more billions flying around in the air soon.
Sure, that's a huge one for Airbus. Well, in business, you either win some or you lose some. Thank you very much for your time, Ulrich, and enjoy the rest of the day.